Have you heard there is a recession coming in 2020? Well, you sure would think so with all the talk about it. Let's take a look at the facts and I will share with you my humble opinion of the situation. Here we go. Hi, Jessica Genung here with Active Realty. If you don't know me, I am a realtor here in the Murrieta, Temecula Valley. Thanks so much for checking out my channel, which we created to share with you everything that you need to know about living here. So what's everybody so worried about? I was reading over the 2020 California housing market forecast that was put out by the California Association of Realtors. It has some interesting insights from their chief economist, Leslie Appleton Young. According to Leslie, everyone is worried about everything. Trade war, stock market correction, the GSE patch, which has to do with government-backed loans and lending requirements, making it easy for consumers to get loans, or potentially harder if the patch expires, global economic slowdown, inconsistent policies, the Fed misses the mark, impeachment, recession, and no Brexit deal. Whew, that is a lot to worry about. So aren't we due for a recession in 2020? We are in our 10th year of economic growth. Here are two great charts from Wells Fargo showing that we're still chugging along in the longest US economic expansion, but it is also the weakest. According to Leslie, these four issues will drive the downturn when it comes. A, global economic slowdown. B, trade war. C, geopolitical crisis. D, a stock market correction. The report says all of the above will cause the next recession, but I would like to point out that none of them are housing related, and also there is no timetable for a recession. I am by no means an economist, but since we are doing our own forecast here, I will share with you my very humble opinion. We think a stock market crash, even just a correction, could be the driving force. Let's take a look back at the Great Recession, where housing and mortgage defaults were the cause of the downturn. Regarding the stock market, the Dow Jones Industrial Average hit a low of 6,470 on March 6th in 2009. Today, as I'm filming this video, we are just a few days away from the new year, 2020, and the Dow Jones Industrial Average sits at 28,645. So that is quite the bull run. Even if the market does take a dip, I don't see values plummeting like they did in 2008. In my area of Southwest Riverside County, it was about a 50% drop in home values. I don't see a crazy drop like that because there are so many people and investors just waiting for another drop. There's lots of cash on the sideline. Real quick before we continue, if you are finding this information valuable, please smash that like button on this video and subscribe to my channel. That helps YouTube know that this is good content and it helps me reach more folks. Getting back to my point that I don't think that we're going to see another great recession. My first job in the real estate industry was working for a broker that sold exclusively foreclosures. I started there as an unlicensed assistant in 2009 and I got my license in 2010, which allowed me to do sales as well. So I was in the trenches during the last bust. Back then, there were a lot of cash investors making offers on our listings. If you remember, there were major institutions on the brink of collapse and some did fail, while other companies received government bailouts. These same cash investors are in an even better position to swoop up on properties in another market downturn. The last bubble burst was a bit of a rich got richer type situation. And because we are somewhat fresh off the Great Recession, folks anticipate another crash. But I don't see it being nearly as crazy as 2008 because a lot of this cash is ready and waiting on the sideline. Okay, enough speculation. So now that we're all stressed out, let's take a look at the actual current economic situation. Fundamentals appear solid and sustainable, if not spectacular. These are numbers for 2019. GDP was at 2%, consumption was at 4.7%, the core CPI was 2.4%, unemployment was very low at 3.7%, and job growth was 1.4%. So as you can see from this growth chart, Our growth has been slowing from 2.9% in 2018 down to 2.4% in 2019, and we are forecasted to grow next year in 2020 at 1.7%. So we're still growing, but we are growing at a slower pace. Moving on to unemployment, it is at its lowest rate in 50 years. This chart shows that mortgage rates remain at historic lows. I had a buyer this year lock in 3.25% on a 5.5 adjustable rate mortgage, by the way. Ask me how if you want to learn about this type of loan. These numbers seem to look great after reviewing the last few slides, but with that being said, I do want to briefly discuss 2020 housing market predictions just released from another source, which is Realtor.com. Here is Realtor.com's national housing forecast for 2020. So we're talking nationwide. Home price growth will flatten with a forecasted increase of 0.8%, so just a little bit of an increase. Inventory will remain constrained, especially at the entry-level price segment. Mortgage rates are likely to bump up to 3.88% by the end of the year, and tightening inventory and rising mortgage rates will lead to dropping sales. Buyers will continue to move to affordability, which will benefit mid-sized markets. In this slide, I'd like to point out just a couple of the line items. Existing home sales, Realtor.com is predicting them to be down 1.8%. So we're talking resales down 1.8%. As far as single family home housing starts, they're talking about new construction here. They are predicting that to be up 6%. So that's how they are coming to the conclusion that overall home sales is going to be up 0.8%. Here are the predictions for my area here in Riverside County and San Bernardino. Realtor.com is predicting the sales growth, that is number of closed listings, to be down 7.6% in 2020. They're predicting price growth to be up 1.5%. In neighboring San Diego County, they are predicting sales growth to be down 3.2%, and they are predicting price growth to be up 0.2%, so basically flat. To the north of us in LA and Orange County, Realtor.com is predicting sales growth to be down 6%, so kind of in the middle, while they're predicting price growth to be up 0.7%, so just a tad there as well. San Diego, LA, and Orange County are typically less volatile than my area here in Riverside County. Tell me what you think will happen in 2020. If you are considering moving to my area here in Murrieta, don't forget to download my relocation guide, which is right down there, which will help you get acquainted to the area. I've also linked both the California Association of Realtors 2020 forecast and the Realtor.com forecast if you are interested in reading more details. As always, thank you so much for watching. I am here to help you should you need anything at all. I would love to hear from you. I'll see you on the next video. Bye.